Hey guys, what's up? Welcome to another episode with me, Shashank Udupa. And in today's episode, I am going to make a very educational episode on the IT sector that is going down right now. Now, why is IT sector going down so important for us to understand? We're also going to look at some charts of US IT, Indian IT, and some technical analysis from US as well. We're going to look at three stocks that might do a good reversal, or it is currently in a good zone to start accumulating these stocks. And number four, if this goes down or continues to go down, where can it go down to, and will this affect our Nifty, and why are these IT stocks going down? So all of these things is going to happen in today's episode. I'll show you the stocks as well, but I want you guys to stay till the end so that you understand where is the entry point, where is the exit point, when can you accumulate, when can you not accumulate. So you need to learn all of that towards the end of the video. Okay, so without wasting any more time, let's quickly get into some meaty content. Chalo. Now guys, okay, this might look slightly confusing, so wait for a sec, let me show you one by one, right? Now, if you actually see the topmost layer over here, the topmost layer, this is the NASDAQ, okay? This is the US market that is currently in a beautiful downward journey. In the Dow Jones, NASDAQ, everything is in a downward journey, right? And if you look at the US 100, the one I've shown you here, the Pepperstone one, that is the US 100 with respect to the IT stocks. Okay, so even the IT stocks, top 100 IT stocks of US has also been going down. And if you look at Nifty IT, they have also been going down in the similar fashion, right? So what I'm going to show you is this. I don't think we require. Let me show you on a dual chart about these two. Now, every time, okay, every time you see that the NASDAQ is going down, number one, you will see that IT stocks will do a bad job. Now, I'm on the daily chart. Top is NASDAQ, bottom is Nifty IT index. And if I zoom out, you'll see how it has gone up and it has significantly come down. And I'll talk about more in detail as to what these charts are and why it's going up and why it's going down. Okay. And I'll show you the three stocks as well once I explain this. Now, whenever NASDAQ goes down, IT stocks usually tend to go in a downward trajectory, right? Why is that? I'll come to in the second half of the thing. But now you also need to understand, I've plotted simple stuff over here on the Nifty IT chart. What have I plotted? I plotted two lines. You will see a black line and you will see a green line, right? Now the green line is something called 200 days daily moving average or simple moving average. And if you look at the black line, that is a 50-day moving average. Now, what does this mean, right? This is the moving average of the stock. Now, every time you see that the stock goes below, the stock price goes below the 200-day moving average, that means every time we see the red or the candle or whatever your stock price going below this green line, it is considered a bearish signal. That means the company is now in a bearish mode, in a downward trajectory. The minute it breaks this, it goes back into a bullish signal. And that is why you might have seen other people talking about, okay, you know what, now this stock has broken the 200-day barrier. This is what the 200-day barrier is. If I zoom out, you'll see the last time we had this similar issue was over here in 2020 when the 200-day moving average was broken. And then we had a beautiful rally. And then over here in April 2020, we had the 200-day breaking. Breaking means it came down. Now, where can this Nifty IT go down? Currently, it is at a very crucial point. Look at this. It is at a very crucial point of 26,782, right? 26,000 is like a very crucial point. It has taken support 2-3 times from this area. But if it breaks this, we might be heading down towards 25,000, which is more like a psychological barrier. Okay, if we break this, we might go down to psychological barrier, and this is a very good time to start accumulating. Cool, awesome. Now next, let me show you the stocks that are there which are currently in a very good zone to reverse, right? Now what I'm going to do is I'm going to also make a small case for this to track, so that we can track. See, every time we do an experiment like this, we need to track whether it's doing good or doing bad. Now the three stocks that we're going to track today are Tata Elxsi, because Tata Elxsi had done a massive rally and it came down. And the second one is TCS, which is Tata Consultancy Services. And the third one is Tech Mahindra, where Tech Mahindra is again good for the future perspective. Okay. Now, these three stocks I'm going to save. Obviously, if you look at the performance, recent performance of these three stocks have gone down quite significantly, and as we can see, Nifty IT has also gone down quite significantly, right? So whenever that happens, when it goes down quite significantly, this I would consider this as a buying opportunity or a buying zone. And when do we start buying? This is a good time to start buying. Yes, if it breaks this barrier and goes even lower, it is a good time, but I'll tell you what it might happen. Okay, wait for that. So these are the three stocks that I'm saving it in my small case. I will share the link of the small case in the description below, but you have to use your mobile phone to activate this. and go check and put in your watch list, or you can even buy it if you want to. Now we will track this IT trend reversal and we will wait for the trend reversal to happen, because once the trend reversal happens, this will start flying quite significantly, right? Apart from that, if you want to check normal IT stocks, you can also check, there's a free access windmill capital portfolio here on small case, which is called the IT tracker. So you can check that and you can look at the stocks inside it. I've just gone inside the stocks. So these are the different type of stocks that are there with respect to the IT tracker as well. And here also, if you see the IT tracker, look at this, right? We had a significant rally in post-COVID scenario on 2020, 2021. We had a good rally, and now from the top we're coming back. Even if you compare it to the equity large cap, IT segment has given a really good rally and it is still profitable. It is if you're invested, but now it is going down, but we don't know how low can it go, right? So that is what we're going to understand in the next segment. Okay, now let's look at the stocks one by one. The first part, I'm coming to TCS. Now this is TCS's portfolio, right? Now, if you look at TCS from a technical standpoint, look at this. It is exactly very close to its actual crucial pivot point. Okay, now this is the support. Now, if this breaks this support, the next barrier over here is directly 2600, which is almost a massive drop. Again, a beautiful drop we will get. And why am I saying this is a beautiful drop? Only because it is good for me to average, because this is a 10% drop, right? Now from here, it can bounce back from this point right now. So the entry barrier is 3000. It should not break 3000 right now. If it breaks 3000, then we will have a bad time. But if it continues going up and if we'll wait until it crosses this blue line, which is the 200-day moving average, then we will have a good time, because then we can expect a slight reversal happening and slowly it going up. But will it happen? The question is, will it happen? And that I will explain in the end as to what are the different reasons why this is falling and how long this will go, right? But we'll look at the three stocks. So now you understood, anything over here is a good accumulation zone. Okay, over here you can accumulate as much as possible in this zone. Here I would just wait for this to either bounce back or either go down. Even if it bounce back, this is a good place to buy, because now you'll see the trend reversal happening. But now it's in a very crucial zone, so keep track of this, mark it in your line and keep it. Next, we look at Tech Mahindra. Now again, Tech Mahindra has a similar pattern, but not as bad as TCS, right? TCS is very, very low. And when TCS goes down, Nifty also goes down, because TCS is a big weightage in our Nifty, right? Now if you look at Techem is doing really well because of Mahindra and Mahindra, etc. But this is the crucial barrier, which is 944. And now if you see, it is making a small consolidation phase here. This blue line is a 200-day moving average. So if it breaks that, positive, doesn't break that, negative. But right now, again, your only margin of safety is this error, this part. And if it breaks this 900 barrier, then it will start going down quite significantly to almost 800, right? So I don't want it to go down to 800 obviously, but if it breaks this, then it's an accumulation zone as well. Even here, I think it's already done a slight trend reversal after touching this 980 barrier. 2-3 times in the past it's touched the same 944 barrier. So you look at it very carefully and mark this zone as well. Third, coming to Tata Elxsi, before I get into why this is happening with IT stocks. Now, Tata Elxsi is a very weird stock. Look at this. It is always trading about 200-day moving average. But Tata Elxsi, if you observe this from the last 1 year, this is a daily chart. It has constantly been trading in this channel. Every time it goes up, comes down, goes up, comes down, hits the channel again, goes up, comes down again. Now again, it's down towards the lower half of the channel, right? Now, if it breaks the channel, then obviously this is going to make a new pattern and it will make a new trend. But usually at this point, if the results are good, and I'm waiting for the next quarter results, because this is going to play during the result time. Now, if the result is good, this will just straight away go back to this point. If the results are bad, we will see it going towards breaking the channel and going down. So for Tata Elxsi, I would say, even though this looks very attractive to enter at this point, I would say wait for the results, because the results of a high growing company with a very high PE and it's slightly overvalued. If the results are good, then it will continue the growth story and it will go up. The result is bad, it will go down. Now, what is happening and what might happen is what we will discuss in the next part. Okay, now let me come back to this. Guys, now we understood those three stocks. Okay, now let me tell you, understand what is happening in the IT space, right? When US market goes down, most of the IT companies in India depend on US for all their sales. Now obviously, if US is going through a big problem and you see that recession happening and fears of recession coming in, US new client addition will not happen. Existing clients might reduce their budgets. So small issues in the IT space will take place. Now the question here is US recovering soon? No, US will take at least another 6 to 8 months to recover. So if US is going to take 6 to 8 months to recover, then the IT stocks in India will also take 6 to 8 months to recover, even though we have the whole bullish scenario of India. But IT stocks, what will happen is next time when the result comes, it might not be very good. The growth might not be there, right? Unless a new trigger or a new growth cataclysm comes in, nothing is going to happen from the Indian IT space. That is number one. Now, Number two, in IT companies, there's something very important called an attrition rate. Attrition rate is basically people leaving the company, right? Now, lower the better. Why? Because all of these people who are working in this company are working for that company for different projects in US or Africa or Europe, right? Now, if they leave the project and go, there is going to be a small problem with respect to how it operates. So ideally, there are software engineers who are benched. They hire extra people and keep them on bench for this reason. Now, usually attrition rate should be very low, but look at this beautiful article that came out quite recently about attrition rate, where it said that the attrition rate of TCS, Wipro and HCL is currently at an all-time high of almost 19.7% in the last 12 months. That means out of every 100 people, 20 people are leaving and going, which is very, very, very high. Wipro is at 23%, which is extremely high, and I think Infosys, I read somewhere, was approximately at 27%, and HCL is at 21%. Now, when attrition rate goes up, the stock price goes down even more. So this is again a big problem, number two, right? And TCS recently came out and also said in July that there is no signs of slowdown in attrition of TCS. Firm said it still has enough signs, right? So basically it's saying TCS like we've overhired, and even though attrition is going on, we are fine. But all of this is going to we're going to look at what is going to happen in the next result, because the next result is going to be eye-opening for all of these things. Okay, now coming back. So these two things you understood, right? So the attrition rate is very high. That's creating a big issue. We had the recession fears and the war fears. So the IT stocks fell down even more. Now new client addition or big deployment in IT is not going to happen. That is going to be another issue. Now to keep these employees happy, usually what happens is now companies, IT companies will have to give you a salary hike, okay, or give you a good bonus package. When that happens, your margins start getting affected. Very clear, right? I'm just talking about facts. Your margins start getting affected, and if the margin starts getting affected, your net profit gets affected. The net profit gets affected, your EPS gets affected. If your EPS gets affected, your PE ratio and your price starts getting affected at the same time. So all of these small things keep hitting on IT companies, right? Now, there's another very interesting thing that's happening because of, you might say that Shashank, you know what? No. There is another thing here. What is the USD INR ratio? The USD INR ratio is going up, right? So now it's reached 80 rupees. It's actually crossed 80 rupees barrier as of today. So now, isn't that going to help the Indian IT sector? Good point, right? Because if you look at the US dollar, that itself has gone up almost 10% in a year. Now, if that goes up, that means these guys get more revenue when they come in. For the same amount of revenue, they make more money because of the dollar increase rate, right? But the thing is, right, in the Indian market, we only look at something called growth. We are trading in a futuristic market. We're not trading in the current market. So we are assuming that TCS will hit a particular revenue number, assuming that TCS will hit a particular EPS number or a net profit number, and depending on that, it is priced today. Now, tomorrow, if TCS pulls a rabbit out of the hat and gives a good result, then all the IT stocks, not just TCS, all of them will start rallying. But if it does not give a good result, even though the rupee depreciation happens and they get more revenue, but the revenue is not increasing because they're not getting new clients, so they're not getting new things, and recession is going on, that will start affecting the Indian IT space. So as long as US takes time to recover, Indian stocks are not going to take time to recover. Now, in a short-term perspective, right, in the next 1.5 months, what might happen? When the earnings season kick in somewhere around October mid to November, we have Diwali as well, which is a bullish momentum for India, and we will also have the earnings season coming as well. Now, at that point, IT stocks is going to be very crucial to look at with respect to the earnings momentum. If you look at all the banking stocks, they're doing really well in India. Bank Nifty is on an all-time rise, right? But IT stocks are only going down, and it will continue to go down if the results are bad. So if you are holding any IT stocks, right? If you are holding any IT stocks, I would say the worst it can go down even further than this is maybe 10 to 15%, right? Even further, if it has to drop significantly, 10 to 15% drop. But if you're holding fundamentally good stocks, like the top stocks like HCL, Infosys, TCS, Tata Elxsi, these stocks, then you don't have to worry too much. You can start averaging at a lower point. Now, I've told you the entry points and exit points of everything. Now, you understood why the IT segment is going down. You understood what might happen in the future. It's still going to take some time for it to recover. And the next quarter is going to be the key trigger, because the results are going to determine everything. Okay, so I hope you guys enjoyed this video. It was a very factual, straightforward talk about IT, because a lot of people are asking me questions about IT. I did cover it briefly in my weekend research session, so I'm going to see you guys again on the next weekend research session as well. And I hope you guys liked this episode, and if you did, click on the like button, share it, and I'm going to put the small case link below for you to track the IT segment. And I'm going to keep showing this small case so that you can understand how the trend reversal tracking happens and how you can make profit from this. Okay, thank you. Shashank, Udupa, bye.